Welcome back. I felt like we got rugged once again. One could only laugh at how the market has been reacting recently. Again, this morning, we start out the day looking a little bit more hopeful. Bitcoin was going back up, 83,000, 84,000. Looked like, hey, maybe we had a chance for recovery once again, because the day before it looked like it was pretty good. Wall Street was buying back from the oversold levels, right? And we actually got a decent inflation reading. So it looked like things were good until they weren't, until the sell-offs begun and we saw everything sell off once again. It wasn't brutal, okay? It wasn't as bad as a few days ago, but it wasn't great either. Tech sold off once again. A lot of companies, okay, not just tech companies, just companies in general, but some tech companies like Apple are really selling off. Tesla sold off again, but the ones that have to import things inside the US, they are being sold off the most. And it makes sense. I mentioned this before. Someone like Apple, right? People don't realize the tariffs do not just affect foreign companies, right? The 20% tariffs was 10 on top of 10 for imported goods from China. It was not paid by China. It's paid by the importers. So where does Apple manufacture all their stuff? All the iPhones and iPads and iMacs and everything, Apple Watches, they're all being manufactured in China. So everything coming in, guess who's going to be paying those tariffs? Apple. Apple is. That's why Wall Street is selling off Apple stock right now, because Apple has to either make less money or pass on the tariffs to the consumers, right? So that's just one example, but there are many other examples. Obviously, Apple committed that they're going to build a factory here in the U.S., and many others are doing so, and that's the whole point of the tariffs, or one of the points. But it's going to take time. It's going to take a while, years upon years, for these factories to be built, and even afterwards to hire the proper people to run them and get a manufacturing started and so forth. It's just not overnight. So it's the same thing with Tesla. You know, all the hate on Tesla and stuff, but you got to realize not all the gigafactories are based in the U.S. Yes, there's a few in the U.S., but there's many overseas too, and some of the parts are coming from overseas. The same thing with cars and homes, everything. The National Home Builders Association, they just came out with a report that because of the Canadian tariffs, because of lumber going up, the average home being built is going to go up by $10,000. I don't know. Well, I do know because I just built my home, right? But my home is a little bit bigger than most. But, you know, if you're looking at an average home that's being built anywhere from 100 to 150,000, right? Just in parts, right? Not counting labor, not counting land, because if you count labor, it's probably double. And then count land, it's more than that. So that's how a house goes up probably to like 300, 400, 500,000 and plus. But if you're looking at just the cost of the materials, you know, I would say $10,000 is at least what, 5 to 8%, if not more. I don't think it's 10%, but maybe. It depends on the size of the home, right? That's significant. That's an instant boost to the cost of homes, right? And that's just, again, another example. And there's many other examples of things that are going to get a lot more expensive. So right now, we've had a couple of inflation readings. PPI came out, CPI came out, that showed inflation is going down. That's good. That's good. But what I worry is you know, these inflation readings, right, come out every month. What about next month? And the month after that, because the tariffs just kicked in. They just kicked in, you know, this month. So as things start getting more expensive, we're going to start seeing the effects of that next month. So when we get a CPI reading, a PPI reading, and PCE reading and stuff come next month, in April measuring March, and then in May measuring April, I think we're going to see inflation start going up. That's the problem, right? Right now, we want the rates to come down. We want the Fed fund rate to come down, and Powell's not going to do it. Just with Trump asking him to, he's not going to do it. He needs to see the numbers. So that's the thing. And today, Trump was asked, and he's like, no, I'm not going to bow down. I'm going to continue forward with the tariffs. He is ignoring the market volatility. And Scott Bessent, the new Treasury Secretary, saying the same thing. He's like, we don't care about the market fluctuations or the disruptions. Okay? They want to move forward. So the two new guys, Howard Lutnick, the Commerce Secretary, and the Treasury Secretary, Scott Bessent, they're both going with the flow. I mean, they have to, right? They're both basically saying Trump is trying to set up, you know, for the future, but short term there's going to be disruptions, and we're just going to ignore the market disruption. Trump is saying the same thing. But yeah, unfortunately, you know, short term, this is what we had to deal with. A lot of trade retaliation, a lot of trade wars happening, a lot of prices about to go up, and a lot of uncertainty. Because a lot of these countries do not like what's going on. And you can make the argument, yeah, Trump is trying to make everything fair and trying to bring jobs back and bring manufacturing back, trying to make America great. I get all that. I get all the argument. But there seems to be more. I think there's more behind the scenes. I think all these guys, first of all, sold all their stocks in crypto before they took office or took their positions. Because if they're all in cash right now, yeah, they're probably really happy that they're all in cash and they don't care about the markets being down because they got to buy cheap. Because, you know, if you look at the charts, I was just looking at charts, man, just from a month ago till now, things have come down so much for Bitcoin, for alts, for tech sector. Things have come down so much within a month. It's staggering. It's not just a little disruption. It's huge. It's huge. Man, it really sucks. Again, there's no way to say it. So you know what I said in my Sunday walk video last week? I'm hoping it's not going to be true, but you know, I guess we'll see. Tomorrow's Friday. By the way, I haven't streamed this whole week, right? I will tomorrow. I think that's what I'm going to do. I'm going to just stream on Fridays. And we'll see how it goes. But tomorrow I will be streaming, so make sure you tune in. And, you know, hopefully tonight and tomorrow and the weekend doesn't get any worse, because right now we're back to 80,000 again. We're below that 200 EMA, which is not a good spot to be in. A lot of technical analysts are saying we need to go back up, because if we stay below, it's a really dangerous point. So we need to go back up. But also, you know, I said in my Sunday walk video, the next resistance below that 78, 76,000 we were at is that 73.8, which was the high formed back in March of 2024. I don't want to see us go back down there. But if we do, that's probably the point that we'll go ahead and bounce off of, right? So we'll see. We'll see if that happens. I'm hoping it doesn't happen. Today, the good thing is, Ripple had some good news, right? The SEC lawsuit's coming to an end, and they had a big news in Dubai. So actually, XRP held decently, so that's good. You know, nice to see that alt okay, outside of Bitcoin, actually can stand on its own a little bit. That decoupled away from Bitcoin just slightly, even though when Bitcoin got weak, it got pulled down, but still didn't lose all of its gains. So that's encouraging. And I do think when the ETFs come out for these individual alts, that's going to make them stand on their own a little bit better. But until then, right now, it's like, you know, it's pretty obvious that all the alts are coupled to Bitcoin, and Bitcoin right now, unfortunately, is coupled to the tech sector because Wall Street is treating Bitcoin as a tech play and a risk-on play, and when they get fearful, they just sell off everything. They just don't understand. They don't understand. But I've been telling you guys to stay strong, to stay focused, because those of us that understand will not give up, okay? I've been showing you guys, the whales don't give up. The whales are still buying. OTC market is still showing a lot of buys, right? Obviously, the big players, like the sailors of the world, they are not stopping, okay? A lot of the miners are doubling down. Smaller miners may be selling because they have no choice because their operational costs are so high, but a lot of the bigger miners, they're doubling down. They're actually taking out debt to buy more Bitcoin, physical Bitcoin. So, and of course, like, we got the reserve formed, and states are doing it, and other countries are paying attention. And we got the real Bitcoin reserve, the legislation being circulated, and hopefully that gets passed in Congress. So we still have a lot of great things, okay? So I'm hoping that you guys focus on these great things, but, you know, I know short-term sucks. Right now, it just sucks. There's no way to slice it. Wall Street's selling off, and, you know, there's not a damn thing we can do about it. There really isn't. Okay. But hopefully you guys are staying strong, and hopefully you guys have dry powder on the side. I know it's hard if you're consistently buying and DCAing, you may be out of it. And if you are, that's, you know, that's fine. Just continue to hodl. But as for the rest of you guys, you know, before, when we're higher, we're going up. You know, I've always said to have that 20, 25, 30% cash pile, right? That maybe have shrunken a lot. For me, obviously, it has too, because I have been buying as well. And, you know, it has shrunken quite a lot. And I know it's probably the same for you guys. And a lot of you guys are wondering, well, is this weakness ever going to stop? It will. It will. The lettuce hands, the retail hands, the sellers of Wall Street, eventually they will leave. The exhaustion will hit, and we'll find that true bottom, and then we're going to hit that and recover back upwards. Let's not forget where we are right now, okay? Despite how bleak and sad it looks, Bitcoin is still at 80. Okay, let's not forget that. We're not back to like 20,000. We're not back to 40,000, okay? Even if we fall down to like 73.8, we're still at 73.8, okay? We're not back to 40,000 or 50,000 like last year. And we're certainly not like below 20,000 to 15,000 like the low of 2022, right? So to keep things in perspective, we are still way better than before. It's just that it sucks compared to our high and compared to just what I said like a month ago when things were sky high. But we'll get past this. We will get past this, okay? But yeah, we got rugged again today. Let's hope we don't get rugged tonight by Asia and Europe. And hopefully we don't get rugged tomorrow. But it'll be interesting tomorrow. It'll be interesting. All this tariff stuff, it seems like every single day we got some kind of retaliation tariff left and right. The one today, the 200% on champagne and spirits from Europe, and, you know, more stuff out of Canada. There's just so much every single day. Hopefully it comes to a stop soon. All right, guys, tomorrow I'll be streaming. Usual time, 8:30 a.m. Central Standard Time. no matter what is happening, I'll be live. So I'll see you guys tomorrow. Take care. Bye-bye.